Good afternoon, good morning, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. Before we get into the good stuff, I want to remind everybody that futures and options trading contains substantial risks. Not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here on this program contains neither trade recommendations nor financial advice. It should be taken only for educational purposes. And with that, it's my pleasure to welcome back, of course, Anthony Crudele. How you doing, Anthony?
Hi, Tom. What's going on, man?
Oh, just enjoying the ride, right? Today's a crazy day already, and this is one of these days that kind of had me flummoxed a little bit, but otherwise doing great. How you doing?
I'm doing good. I'm still long from when we talked about. Remember when I've been long those micros?
Yeah.
I'm still long. I'm gonna talk about today's actually a great day to talk about it because it all stemmed from the auto anchored VWAP from the beginning of the year. And yeah, it's a wild day. I mean, we're earnings season. Data keeps coming out, and you've got a lot of people that it's funny. I was in a Spaces the other day, and this is a question maybe I'll ask you, and we'll see what the audience thinks. Maybe they chime in on chat. Do you think that people are too bullish or too bearish right now?
Oh, wow. That's a great question. I think the market is looking to be bullish. I think people are trying to be bullish and they're looking for every little bit of good news come out. But I can't, it's just confusing because uh I thought we were back to good news is good news, and today certainly wasn't that case.
And it was interesting. The way I answered it was this: is that all my golf buddies and poker friends are all way too bullish because they didn't cover anything last year in the down market. They're like, we knew it'd come back, right? There wasn't enough pain out there. And all my trader friends are going, unbelievable, this rally. Why are we up this much? What's changed from last year? Nothing. We shouldn't be this high. And when you look at that, this is, I think, really, when you look at that sentiment between the two, it does kind of explain why we are having the kind of year we're having, right? And I think today we're going to be focusing on that auto anchored VWAP and why I think it's so important. But it's just interesting to think about the psychology of different people. And when I talk to one set of people, they think one way, and you talk to another set of people, they think another way. And so, when it comes down to us as traders, we have to prove our strategy has to be proven by the market that our ideas are being reinforced by the market, right? So the auto anchored VWAP to me is a great tool because it uses price and value, right? You'll have some people that just say, follow price. Price is everything, just follow it, right? Markets are making higher highs, higher lows. We're in a trend up. Reverse for the trend down, right? We're in choppy inside days, just follow price. And other people will say to you, all you have to do is just follow the volume. If you follow the volume, that's going to tell you what the big players are doing. And so you have an indicator that actually has a combination of the two. And I really like the anchored VWAP and just VWAPs in general, just because they're so much better than a moving average because it's volume weighted average price. So it's, if you wanted to know what that was, maybe you didn't. It's just by definition, that's what it is, right? So what I like about it is, and what we're going to talk about today is it's helps you understand the true sentiment of the market. That's why initially I asked you, do you think everyone's too bullish or too bearish? And this indicator really helps me understand really the pulse of the market, right? And because of the reactions you see off of it. Now, it's not a tool that I'm going to use as a strategy signal. It is going to be a strategy direction. And so that's what I think is so important about that auto. I say auto anchored VWAP, and I'll explain why I use an auto today.
And that's a really great point that you said. It's not a signal per se. It's I look at it like, what is the status? It's a gauge, right? What is the
Exactly.
bias of the market right now? It's not like you're looking to switch or like a cross of two lines or cross below a value, but it's just a general indication of what is the market thinking right now.
Exactly. And actually, let's pull up the charts to start, because today's going to be a day where the visual side of things is so important. So here we are back with a weekly chart in the E-mini S&P. And I want to go back because I want to, and I've talked about this already this year, but since we're really hyper focused on the auto anchored VWAP today, I want to go over a couple of things that might be things I've discussed in the past. First, the auto anchored VWAP, it's the order flow. I couldn't get those words out. Order flow anchored VWAP on NinjaTrader. And I know that you have to have the full license to get it. And this is something that is an additional tool that you'll add to NinjaTrader. But once you get it, here where I am on the weekly chart. And what I'm going to do is I'm going to double click on it, and I want to show you just what I have up there. I have it to reset on the month. So that's auto anchored to the first day of the month. All right, everybody, auto anchored first day of the month. Really, the most important part of my long-term homework is the auto anchored VWAP to the month. Then I don't have the standard deviation bands on there for the monthly because I just want to see above or below price, right? That's it. We're looking for direction, above or below price, red, green. If it's below, it's red. If it's above, it's green, right? Also calculate on each tick. And as you can see, that's the order flow VWAP tool right there. So that's what I have for the settings, because that's important, because you could have different settings on here. It's extremely important, I think, to have it updating on each tick, because it's volume weighted average price, and you want to know what that is immediately after it happens. So now let's go back to the beginning of 2022. Here we are, January of 22. We opened up the year and went down. January, when you look at it, pretty much every year, if we went back and back and back and look at this, and I have, you can go back as many years as you want. January is typically a very trendy month. Why? Well, typically it is because it's the first day of the year, and if we're up or down on the year, we could typically trend that way for the entire month, right? Very seldom do you see a very sideways January, where the market's just even on the month, right? It might close even on the month, but very rarely is it just sitting completely at even, because a lot of people are making their trades based off of that marker from the beginning of the year. Okay. So now you want to mark to an important point. So you anchor it to the first day of the year, which is the beginning of the month, and then you watch how it trends. And if you go back and look here, and I'm actually going to make this bigger because I'm only going to look at 2022. So this is 2022, right? The whole year. Look at the beginning of each month and look at how that auto-anchored VWAP continued. As it went lower, we stayed below it. Great gauge for sentiment. Now, this moving average here, I'm actually just going to remove this right now because I don't need it. We'll maybe go pull it up there later and talk about it. But when you look at it here, you could just see that we trended January and February, not one weekly close above the auto-anchored VWAP from the beginning of the year. Now, is that going to make you a bunch of money? No. But is it going to help you keep you on one side of the market and keep you away from being on the other side? Yes. And that, to me, that's one of the most important things when it comes to trading, is find the side that you favor more than the other, right? Because so many people, especially day traders, come in and they just look for that signal for that day, even short-term scalpers. And I'm somebody who was a very aggressive size, scalper for a lot of years. And I would come in and I would realize that the days I would scalp against the primary trend, I would just get chewed up alive. The days I would scalp with the primary trend, I would do really, really well, because I would just know hyper-focused one side of the market, right? Wait for my setup that favors one side of the market. Everybody talks about wanting to be a consistent trader. That starts with really understanding primary trend, right? And there's a lot of different ways to gauge that, surprisingly, because you think, oh, how hard could it be to know primary trend? And for me, because of the short-term nature of my trading, which is intraday to multi-day, I like auto-anchored VWAP at the beginning of the month, because it tells me if we're below it, it's really also something that people are getting a performance against, right? Because how are you trading against that, right? The market is actually, it's a performance metric. The market is underperforming the volume weighted average price. The market is outperforming the volume weighted average price. And when you go back and look at just the color schemes here. How often do you see a shift, right, in the auto-anchored VWAP? And it's very rare that you see it in the middle of the month. Isn't that kind of interesting, Tom, if you look at this? You see whole month down, beginning of the month down, rest of the month up, whole month down, end of the month up, right? Very similar. It doesn't change quickly. And so psychologically, you as a trader, you know, okay, if it's not changing quickly, then I don't have to be super quick in changing my market direction, because until you see a weekly close above it or below it to potentially shift it, you're just looking more aggressive on that one side of the market.
So question for you, because you're right. It is pretty interesting that these shifts come, pretty close to the end of the month, but they do, because of the way you set up your study. I'm assuming, like every other study, we do an update on every tick. That weekly candle can change its bias during the week, right? We know that if we look at August, for a couple weeks, it was 1, 2, 3 weeks, it was above VWAP. The last week it fell below. At some point during that week is when it fell below. It just didn't happen on the last Friday of the week, most likely. So my question is, Anthony, are you looking at that every day? So
Yes.
meaning you started the week on Monday, you don't come back to this, or Sunday night, you don't come back to this the next Sunday. You come back to it the next day to see if that bias has changed, because we are trading intraday.
Correct. And so I don't know why my bars are so big here, but I guess actually, let me go back to a candle. Oh, I have the bar width at 25. Why that is, I don't know. Okay, here we go. So let's look at it on an intraday basis, right? Here it is on a daily. It's still relatively smooth, right? There's not a lot intra-month. Let's go back and look. It's relatively smooth. You have a day here, a day there where maybe it shifts, right? It's not often. Most of the time, the color scheme is staying pretty consistent. And this is so important. I cannot stress to you guys how important this is to really my later in my career success, because I'm definitely a two-way trader, right? I trade long, I trade short. That's why we trade futures, we trade options. When these markets can get trending, let's face it, let's go back the last 5, 6 years, right? These years or these days, we get a lot more trend days. We get a lot more days where it seems like it just grinds us to oblivion. Back in the day when I first started, we had a lot of back and forth days. The price action was very different than it is today. The reason is because now the market's pricing is so much higher. So the higher you get priced in NASDAQ, S&P, Russell, Dow, the percentage move becomes much bigger, right? And so now you have a lot more volatility without really having volatility changing much percentage terms, okay? So what happens is that you get these moves that go further than you think. And so what happens is you get a lot of tendencies to want to fade a move based upon distance, right? You'll be like, oh, S&P's, it's up $50 here. It's up today. Maybe just, maybe the range is in. Let me turn around and maybe get short. And you do a lot of counter trend trading because you feel like you've missed that move and you just get burned up, right? I mean, just go back and look at last year. If you were buying dips, you were just getting chewed up, right? For the most part, a majority of the year. And I see that really similarly happening a lot this year, where people are trying to sell the rallies too aggressively. Like today was one day where, worked early, but, we're right back up again. And why are we right back up? And I continue to stay long because we keep continuing to hold above that auto anchor VWAP. We keep hitting it and bouncing off of it. The reaction is strong. So why do I want to step in and get short on a counter trend? I mean, you're stepping in front of a freight train to pick up a few pennies versus waiting for the pullback that I know I want to see and step in and try to find a place to go with the steam train.
Yeah, that makes sense. And here you're looking at it on a daily, you're drilling down and looking at it, not just on the weekly, but the daily. And I'm assuming, as we know, as we've seen before, on an intraday as well. So that, that really makes sense, right? We want to be trading in the flow of the market.
Exactly. And that's what this helps you. And why I stress this so much, just this simple thing, is because you come into the day and you can build whatever strategy you want, and you add this as a layer to it, and you could come in and it's a great confirmation, right? If you have bullish setups and you're above the auto anchored VWAP on a day, it allows you to come in and be more aggressive to the long side, right? Consistency in this market, I just did a podcast on this the other day, does not come by you making money every single day. Most people think consistency is, oh, I just want to make money every day. You and I both know, Tom, when you first start in this industry, all you want to do is make money, right? And then when you lose money, because most of the time that's what happens to people when they first start, then you go, oh man, all I want to do is be consistent. And the only way you find consistency is by finding consistency within your process, and you become a better executor of your strategy. And I don't care what that strategy is. It really does not matter to me, because the strategies itself, they're all going to work sometimes, but nothing's going to work all the time. So what you have to do is you have to do, I think, a layered process to help you get the most out of your strategy. And this is why the auto anchored VWAP to me is so important, because this is better than a moving average. I don't need a moving average. I talked about the 52 week, I think, as a gauge for bull or bear market. I even like the 10-day moving average, which is really simple, because it's like, okay, what's the last 10 days been doing an average price? And maybe it lines up with the auto anchored VWAP or something. But ultimately, this is a sentiment indicator to me. This tells me that the market wants to buy dips. It's looking for reasons to go higher. It is outperforming the market. It's just the market's performing well right now to the upside. Opening range for the year. Since then, we've held it. That's this blue line right here. It's pretty much the low of this recent move. Back above it. To me, we're bullish.
So I want to make clear what the difference is, because you did bring up the moving averages. Just the quick difference. A moving average is simply an average of price that moves when there's a new bar. We drop the old price, right? So there's no mention of volume in there. And what happens if you think about this, you could mix in either on an intraday, right, opening range volume, which we know is higher, versus middle of the day volume, which is lower, or on a historical chart, there could be a holiday or the day before and after a holiday in there, and then the next week you have a GDP number or a PPI number, CPI number, and that volume's huge. So you're comparing not really apples to oranges, but more like bushels to little bags of oranges. Where VWAP is simply that volume is weighted. So the bigger move, the bigger price. If I put 10 contracts on one price and you put one contract, it's going to be weighted towards my price, right? Because I put in 10 times the amount of volume. That's why it's so important, right? Because that's the sentiment part of it. The important prices have the big volume on it, and that's what VWAP reflects. So I just want to clear that up, the comparisons of the two.
Absolutely. And I'm glad you did that, because once again, you have people that say just follow price, just follow volume, right? And to me, that's why this is such a great indicator. And it's a simple indicator that anyone can use. It doesn't matter what level you are, where you are in your career. It's a great add to your strategy. Now, I want to take it to the next level. This is something that I use, and I think this is something that has been also extremely helpful, that I have only started to use maybe the last 2-3 years. And what this is standard deviation bands around it. And this really helps me on the intraday side of thing. So it's the same settings I showed you from the beginning, everybody, right? But now you're going to auto anchor, just to do it really quickly. You're going to auto anchor it on the session, right? So you see the drop down here, you got session, week, and month. So the session is the regular trading hours. How do I know that session? Because you see CME, US Index Futures, RTH, that's regular trading hours. See that right here on the NinjaTrader platform, right? 3-minute chart, update on each tick. And I have my standard deviations, right? There they are. So pretty simple. 1, 2, and 3 standard deviations. Now, why do I have this up? Well, this helps me get into the flow of the day. Okay. You start off the day, if you've watched any of the videos I've done, you know that I really, really love the 3-minute bar, because I think it really is, it just fits into my time frame for the day. I mean, some people will look at opening range on 15 seconds, 30 seconds, 1 minute, 30 minutes, 1 hour, whatever you want. I use 3 minutes. It's worked great for me. I take a 3-minute bar, I highlight the top and the bottom of it, and basically I box it out. So that opening range for 3 minutes is important to me, because I should quickly kind of go over why we use an opening range. Because think about this. When is somebody most likely to get knocked out in a boxing match, right? When is somebody most susceptible? When is their adrenaline up the most? You ever watch, UFC and all that stuff? You ever watch the beginning of like a soccer game or a hockey game? Like that adrenaline is high, and it's like everybody's coming in and they're doing something. There's a ton of activity. So the opening range absorbs that activity, right? And how far or high it went really can set the tone for what the day is going to be like. Because at that point in time, everybody that has to do something, that's on the field that has to do something is most likely doing something. I'm a broker. I got to buy today. I've got to sell today. I've got to do this. You might watch for a little bit and then boom, you're in. And then all of a sudden, algos, traders, everything starts taking place from there, right? And so you box out that area and you auto anchor a VWAP to it because that area represents that opening, the ring of the bell. Now, once I have that range, I kind of have an idea and being like, okay, if this auto anchored VWAP stays within inside that range, that means that nobody has really scored. Nobody's knocked anyone out. Nobody has pushed outside of absorbing that first 3 minutes, right? So right now in my mind, I look at it and say, hey, nobody's winning this battle. This puppy can go up or down from here, no problem. So what I start to see is as we start to get expansion, right? Volume weighted average price starts to go down, prices going down. Now, if it starts to go through that opening range low or that opening range high, you now have somebody who overtook the day, and that today is the sellers, right? So once that happens, now I know that for today, the sellers are in control. People are taking this rally and they're selling it. Sellers are back. Now, as an intraday trader, I say, number one, order flow VWAP on the daily and the weekly, we're above it. Intraday, we're below it. What can I expect? This is where the volatility standard deviations start to help me. How far can the sellers push down? So there's a couple things I'll look at here, a couple strategies to go about this. One is if I'm going to stay in a swing position and look to add to it, I look at 2 or 3 standard deviations away from intraday, from the intraday VWAP as potential entries for swing positions because you got a much wider stop. So as you can see this morning, they really couldn't get outside the second standard deviation and buyers start to come in and support there because they basically say, look, we're in control on the bigger picture. You could sell all you want. We're going to absorb you in here, right? And then when they start to push up, they get above the VWAP, some short starts to get squeezed. They can only get 1 standard deviation above the VWAP. So now the sellers are saying, okay, we're going to try and push back here and we're going to bring you back to the VWAP. And then all of a sudden they're back to 1 standard deviation below. And then you start to have this battle around it, right? And what it helps me understand is, okay, how is this day impacting the big picture? Like some trend days, you'll go back to last year where you'll have days where they'll just sit on the first, second, or third standard deviation the whole day. And that day is a super powerful trend day to the downside or the upside. But when you have a day where it's conflicting with the opposite side, you cannot be too aggressive short anywhere at or below the VWAP, right? Because the longer term players are absorbing you on the first and second standard deviation, right? And that's just what you see happening. They're only letting you get so far.
Go ahead.
Go ahead. No, go ahead. I think it's a good.
Yeah. So what's interesting, and you mentioned it before, is you're not using the VWAP as a signal, right? You're not trading off the VWAP itself. When it crosses below the opening range, or if it were to go above, that gives you your bias for the day. You've determined who's in control. You've got to gauge it with what you think about the overall picture or the daily picture. And you have to see where it's going in terms of the standard deviation bands. Those become your guides for when you're taking a trade. The standard deviation bands really become those guides.
Correct. Because the VWAP is, once again, it's a tool for gauging what the day is, right? And so to me, on a day like today, intraday, I can't be long, right? On a swing position, I could maybe step in and buy 40 34s or 40 26s if it made sense to me on the longer term. I'm not going to do that today because I just have no need to. I've been long. I'm staying long. Well, actually, as we're seeing it live, we'll see if they start to absorb it here a little bit again. It wouldn't be surprising me to see them come back up and spend some time between 34 and 42. And once again, just because it's showing me the flows of the day, right? You start to get below this standard deviation, it could be a quick move down to the third, and then we'll see if the bulls can hold there. You're actually seeing a surge in volume come back in. But once again, on a day like today, I know at this point, I can't be long, right? I can only be long on a second or third standard deviation to get in for a swing position. No intraday longs for me at all. Just does not going to work for me today because the sellers have proven that they are in control. Now, there's another way to trade it, right? The other way to trade it is, let's just say that you're only intraday, you don't care about the bigger picture. You could look at this and say, okay, who's in control for today on the shorter term time frame? And that's the bears. And then what you do is you watch the responses. What's very interesting is that once we started to get below the VWAP this morning, and we got below in here, right? Once we got up that first standard deviation, they immediately showed some sort of showed some resistance within opening range. To me, now you have a very solid, I would, from the way I would trade it, would be a short setup here, and you would have it, and you would risk your one standard deviation risk above to buy at 1 or 2 standard deviations below. This is a great risk to reward, because what's happening here is you've got 50 shorting 58-ish with a 68 stop. Let's just say that's what it was, right? Then you go and your targets can potentially be 49, 41, 32, right? I like scaling out of these, but you've got a really good risk to reward type scenario here on a day where you're seeing strong responsive sellers. So if you want to trade with the intraday standard deviation bands, that's how I use it. And I use, it really comes down to, you have to see kind of what they do. It takes you a little bit of time to see it. And not a lot of trading really done early on. It comes in later, and then as you can see now, they're continuing to push lower. And so to me, there's just two ways to play it. If I'm a longer term player, I always am going to lean more towards that longer term, daily, weekly. I'm going to step in on the intraday, see what the intraday shows me. And then maybe I get a second or third standard deviation band potential of entry. Or if I'm only intraday, I know I could be short, although I'm going against the primary trend, I could be small, and I want to get as tight of a risk reward as possible. Meaning that I'm not going to short just at the VWAP. I'm not going to short at the first standard deviation on the retest. These are areas to use to cover. These are the areas you use to short. So you box out that range, and that's what the standard deviations bands are extremely helpful with.
That's great. And Anthony, I have a quick question. I think I know the answer, but I'm going to put it to you. When you see the VWAP band cross below or cross above that opening range low or high, it doesn't rarely, I would think never has it crossed back above and gone through the other way, right? It's just
Very
the
rarely.
nature of the calculation.
Yeah, I mean, once again, this is why I like this tool, because it's smooth, right? It's not, oh God, I'm long, I'm short, I'm long, I'm short. I know for today, I cannot be long intraday. I can't do it. It's already proven to me. I don't need to look at anything else, right? Intraday, if I'm looking to get long on the longer, bigger picture, I stay way on the outsides, right? I say, okay, maybe 3 standard deviation, I could step in and risk 1-to-1 on a scalp, or, I buy something here for a longer term. It's the only way I trade it is on the far outsides, but very rarely does it get above it. Does it get back in it? And if it does, that's when you could potentially see some decent squeezes.
Got it. I know we're running out of time, but I do want to hit, I know you have something to hit, and I want to hit something with the tweet of the week, question of the week. We got a question this week from Sailor Bob. Sailor Bob says, can any inference be made on price action prediction when a difference exists between the E-mini S&P and the micro E-mini S&P anchored VWAP?
I don't think that there is any play there. And it's really because the E-mini S&P, first of all, should be the one where I would use on the charting basis, even if you're trading micros, because that volume in there is, well, it's 10 times per contract. So it's going to be more relevant. Even if I'm trading NASDAQ, which I trade the micro NASDAQ and I trade the big E-mini S&P. For NASDAQ, I almost solely trade micros, but I look at the NASDAQ chart because I look at that purely because to me, that's the leading market. So I don't think that there is anything to look at between those markets. I will say this, something to look at, and I know we're running out of time, but I want to do this really quick because this is an important thing. Look at the 3 or 4 major indices. I only look at NASDAQ, Russell, and S&P. Where are we today in S&P? Opening range, broke below it, market's soft, right? Let's go to NASDAQ. All right, let's go to this chart right here. Here's the NASDAQ, right? Opening range, high, broke. There it is. Trend day down, right? Getting a little bit weaker. Let's go to the Russell. Here's the Russell. It's even weaker than the other two. Couldn't even get to the VWAP the whole day. So it tells me a gauge of each indice. So if you're going to be short one market today, which market would you be short? It'd be the Russell. The Russell can't even get above the VWAP. And you also could see potentially a really strong trend day when you have all the indices having the same look on the same time frame.
Awesome. That's great. Thanks for that. And thanks for that question, Sailor Bob. Be sure to follow us at NinjaTrader. You can send in your own questions. Just be sure to include Ask DYE as a hashtag and at NinjaTrader in the question. Tweet it to us. And if we pick yours, we'll send you something nice. If you're in the United States, 50 states of the United States. So thank you for that, Sailor Bob. Anthony, I know you have something to talk about right now.
Yeah, just real quick, I want to talk about the event contracts. If we could pop that back up on the chart. I just think that if you go to cmegroup.com/event contracts, this product is great for like trend days. This morning, I actually took some yeses before the open, which is basically a call, and those aren't working out so well at this point. But if you choose to trade a trend day, and sometimes you're like, I don't have any setups for day traders, this is a great tool because it's a daily option, and it has it on all the major indices. And I'm just going to talk about something that I do at placeyourtrades.com. We have a chat in there and everything. And you can go in there and see what we're doing for event contracts. So I highly recommend you go to placeyourtrades.com and check out what we're doing there. And of course, cmegroup.com/event contracts to learn more about the event contracts.
Awesome. It's great. We talk about it on the bookend shows, bars closing and the opening range. It's fun to look at, and great stuff you're doing here, Anthony. I'm impressed. So with that, I appreciate your time as well. And any last comments?
No, that's it, everybody. Remember, everything I talk about here, this is a strategy that's worked for me. I think no matter who you listen to, it's always important to put it in the context of your strategy, right? Trading is personal. And I just really like this tool. And hopefully you learned something today about a tool that just by anchoring it to the simple beginning of the day, simple beginning of the month, it could help you just, I think, get a better understanding of trend and help maybe put you more on the right side of the market than the wrong side of the market. And of course, you guys could follow everything I'm doing at Anthony Crudele on Twitter or anthonycrudele.com.
Awesome. Thank you so much, Anthony, for another great show. And thank you to all the viewers who participated. We'll be doing this again next week, Thursday at 10:30. So in the meantime, I want to wish you have a great trading day. We'll see you later.
See you, everybody.